Welcome to the Rob Seco Field Ready Podcast with your host, Jim Robinson.
Hello, and welcome back to the Rob Seco Field Ready Podcast. I'm your host, Jim Robinson. So the 2020 crop has been harvested and much of the grain has already been sold. But if you have anything in your bin, you probably still have some unsold bushels. To maximize your return on the grain you produced, we're going to take a look at the grain markets in today's episode. With me to do that, we have Bob Linneman from Kluis Commodity Advisors. Hello and welcome, Bob. Could you introduce yourself?
Yeah, thanks, Jim. I appreciate the opportunity to be here today. As you said, I work with Kluis Commodity Advisors. Our home office is out of Minneapolis, actually Wayzata, so just on the west edge of Minneapolis there. We have two offices in South Dakota. We have an office in Wisconsin, one in North Dakota, and I think we have, or just about to get one in Nebraska. So kind of a started smaller shops, and still I think there's less than 10 brokers across the entire company, but very well connected, very deep as far as the knowledge between the commercial market, the grain merchandising market, the physical product market, how it translates into feeding grain if you're also a livestock producer. So a lot of experience between the guys that work there, which it makes it a really good environment for us as brokers and for our customers. We can bounce ideas off of anyone in the office. So
excellent. So we have the right guy to talk about commodities in, and it's already happened.
I'm going to do my best. Jim.
So Bob, could you tell us a little bit about what's happened in the grain markets up until this point in 2020?
Yeah, boy, talk about a roller coaster, Jim. I mean, go back to July, even June, July this summer, we were looking at corn ending stocks for the new crop somewhere in that 3.3 billion bushel carryout. The general psyche of my customers, and I'm sure you guys saw it as well, the just general emotion was draining quickly. Guys were getting very nervous. Bankers were very nervous. I visit with a lot of bankers routinely, and both sides were just starting to. You could feel it coming. Like, oh my gosh, we're going to have another, third year in a row, and for some guys, fourth year in a row of barely scraping by. And with prices, even with good crops, guys were making it work. And then you get into late July there, and the weather shifts, and we don't get any rain. And those were widespread areas that missed rains. Things started changing for the beans. We started seeing big exports kick in from China. We'll talk about that a few more times here today, I'm sure. But the demand side of the equation really started picking up. So when you look at a little bit of a drier end of the growing season in the U.S. here, it didn't devastate our crops. We don't want to go as far as saying that we had a crop disaster like 2012 was. It's nothing like that. However, when you have a big spike in demand like we saw starting in, I would say, let's call it August, kind of is when the thing really turned, and you saw the demand pick up big time. You saw production estimates in the United States declining a little bit here after every monthly USDA supply and demand report. You saw those numbers declining, which for a trend, that's what traders look at. They want to see what is the trend during that time frame. And when that trend started going down instead of going up, that really kind of sparked the funds, the managed money. And that's when the managed money stepped in. And boy, did that just turn things around real quickly. So kind of in a nutshell, that's probably the biggest factors right there for 2020 up to this point has been the funds stepping in, the lower production in the U.S., and really the demand. And the demand is probably the biggest factor there, Jim, as far as we've never seen anything like this type of demand to go with a pretty good crop all in all. I mean, we didn't hit a record, but it wasn't a disaster by any means. We're only a few bushels off what our, early summer estimates were, Jim. So, I mean, it's just something we can't compare to at this point. So the demand, this super strong demand is a road or a path we haven't been down. So we really don't know how it's going to unfold, Jim. And that's where it's going to get interesting.
For sure. So with the spike in demand, how much do you think American farmers are going to be able to take advantage of that versus, say, grain merchants and people who are actually holding a lot of the bushels today, are today's farmers able to take advantage of the spike in demand?
Yeah, so that's a great point. So who's holding all the bushels? Like you said before at the very beginning of the podcast here, I think a lot of farmers, U.S. farmers, sold off the combine, which really the futures market was telling you don't store it. I mean, there was no carry in the market. The spreads were saying sell it now because you're not going to get paid to store it in your bin. And with that, and profit levels were there with the pop in prices as harvest kind of got underway, and bankers were wiping their brows off because they were nervous, and balance sheets started to look better for the farmers, and everyone. You toss in the farm payments that were paid out by the government. The year-end income really started looking pretty good right off the combine, and a lot of guys where they were, like I said, the emotional state of the farming industry, it was teetering on being scary there for a little while. So when you get that type of switch in, mental state, it's a good idea to make some sales. It really was. It's just now you look back and you say, darn it, I just sold too much or I just sold too early. And the worst part about marketing is when you pull that trigger, you can't look back. You have to keep looking forward. And that's one thing it's really hard to do. I grew up on the farm. I know how that works. You spend the entire year growing that crop. And when you let go of it, it's hard to let go of it. It's something that, your blood, sweat, and tears went into it. So to let it go, it's a tricky thing to do. But if you can do it at a profitable level, you just have to be done with that one and move on to the next one. And that's something that I think a lot of guys are sitting back saying, shoot, I wish I would have jumped in and bought a call, or I would have done something a little bit different with the marketing. And now they see the market's up, in some cases $1.50 from where they got out. And they sit back and say, wow, what my year could have looked like with that on top of it, Jim. And that's just everyone does it. It's just kind of that human nature, but it's something that we really try to focus on. Just keep moving forward. Look at the next sale that you can make that's at a profitable level, Jim. And that's it's something that this whole winter we're going to spend. Look at the next sale. What can we do for what's left this year? How can you retain those bushels, retain ownership? And what can you do for the 2021 crop? New crop in 21 there, which we'll visit about here in a little bit. But as far as things that you can do, you can still buy call options. You really can. You can look at buying spreads. And those are things that if you don't quite understand what that is, we'll give some information later where you can give me a call, or you can call your broker and visit about them, whoever you're working with. And the bull spreads in these grain markets, especially the soybean market, Jim, that just is a lot of power behind that right now. And there's a lot of reason to think that it won't slow down for a little while unless if something fundamentally changes in this market.
Yeah. Yeah. So let's say that a grower does have some unsold bushels in his bin right now. What would you recommend that grower do with those bushels going forward through the rest of the year?
Yeah, so for corn, I think corn is going to be the second or third kind of. It's going to be on the back burner. Let's put it like that. It's going to be the one that's in the shadows. It really isn't as bullish of a story as soybeans. And, I don't like to do this very often. And I think in the 12 years I've been in this business, I think I've done it twice, where I might say that instead of re-owning your corn bushels with corn calls, look at buying a soybean call. And really try to look at a very reasonable approach to owning soybeans versus corn right now. Unless if something, like I said, fundamentally changes in the corn market, the soybeans are the more bullish commodity right now. And that's where leaning guys into that idea of go out and get into the May or get into the July contracts if you don't mind spending 50 cents on a call option, and just buy that call option and sit on it. And the reason behind there's a lot of strategies being tossed around, buy a call, sell a call, or buy a call, sell two calls over the top. I really am not interested in doing much of that stuff, Jim. The situation with where volatility is right now and with what those upper calls, what those premiums are worth and where they think they could go, it just isn't going to perform. That type of strategy isn't going to perform. And you won't be happy at the end of it. The end result just isn't going to be there for you. So I know it's expensive, go out there and just buying an outright call option if you're a little bit nervous about the market. Getting into those spreads, like I said, I like that as a retain ownership strategy as well, Jim. Buy the July soybeans, sell the November soybeans. That spread there. We can get into some of the details there if we have time, but in 2013-14 and 14-15, that spread alone went to $2.70 the one year, and it went to $3.59 the other year. I think we're trading about $1.30 today, right now as we speak. So there's a lot of room if we're looking at ending stocks and trying to compare year to year with where the U.S. ending stocks rolled out at the end of that season. There's good reason for those spreads to keep moving.
Mm-hmm.
So,
yeah, excellent. So that's good. Now, in a previous conversation you and I had, Bob, we talked a little bit about local basis and what might be done there. Could you tell me, kind of reiterate what we had talked about before, and tell us a little bit about your thoughts on local basis?
Yeah, so basis is going to be an interesting game this year. I think I know a lot of my customers were getting phone calls from grain buyers as they were running through the combines and corn was starting to get into the bin. They really weren't calling to ask if they could buy corn. They were calling to ask how much corn you have. And I literally think they were writing down in a notebook, oh, yep, Farmer Joe has 130,000 bushels of corn in the bin. And, the neighbor down the road has, 65,000 bushels in the bin. And then this guy's 8 miles away, just keeping track of how many bushels there are. So when they need to buy corn, they'll make phone calls directly to the buyer or directly to the seller, to the farmer, so they can work out a deal between buyer and seller just over the phone and literally initiate that transaction kind of away from a posted bid. As everyone sees you can jump on the internet and pull up your local elevator and see what their posted bid is and basis. They're going to leave that a little bit wider than what they're actually paying for grain when they buy it. They're going to try to get those bushels locked up and honestly, shop around. Don't be afraid to shop around. If you're within 8-10 miles and you don't mind trucking this way or that way and your relationship is good with either one of those locations, take the time, make a phone call and just say, hey, I've got this many bushels. This is really the price I want for it. Kind of play that game a little bit. You're in the driver's seat at owning those bushels, holding them on the farm in the bin, especially for corn. Now, soybeans, I don't think there's a lot of soybeans owned out there in the bin. If there are, I would honestly say probably sit tight on them. For soybeans, I really think it's going to be hard to find this physical soybean in the U.S. here come springtime in the United States. I think it's going to be tricky. So
that kind of transitions us nicely into what do you think farmers should be doing looking at their 2021 crop?
Yeah, that's a great question. I think the difference between this year and next year, obviously we're going to see more acres. I think that is kind of a given. Everyone's kind of already out there throwing out anywhere from 3 to 4 million more corn, 3 to 4 million more beans. I don't think those numbers are inaccurate. I think it's going to be close, maybe even a little bit more. You might drag some wheat acres into some soybeans and corn instead. Some farm operations don't like to deviate from their crop rotation, as you guys are well aware of that. That's something that might be tested this year. That honestly might be tested, where if they can put the agronomics into the soil and go corn on corn instead of putting the wheat in or messing with the rotation a little bit because prices are where they are, they might do that this year with corn and soybeans. The world needs the U.S. to come up with a good crop in 21. They do. South American weather, we haven't talked too much about that, but that's going to be a big issue here this winter. And if the La Nina pattern continues to kind of create some situations down there that are unfavorable for growing, we really are, the world needs us. Like I said before, the world's going to need the U.S. to put together a pretty good crop in 21. We've done some number crunching on the soybean side of things. Even with a 4 million acre increase in soybeans versus the 2020 crop, you leave yield, I think we left it at 51 bushel an acre. Harvested acres, we didn't mess with too much, kind of left that ratio the same. If you leave exports and usage the same, Jim, you can look at a real scenario where carryout, starting out with those types of numbers, carryout is under 300. And that's a pretty scary area to be talking already for the 21 with an increase of 4 million acres. So the whole game in the soybean world, and that's why I said earlier, owning the soybeans versus the corn right now seems like a better idea. So when it comes around to the 21, what can you do to protect out there? I'll look here quick. December 21 corn is trading 412, and November 21 beans are 1052. So that's trading right here. Current prices. Are those bad prices? Absolutely not. They're not. Anytime you can get corn into that 410, 420 range, you get beans into 1050. For the most part, with average yields, those are profitable numbers. Do I think that there's further upside? I do. I honestly do. So if you're nervous about this area, look at buying some short-dated puts. If you're not sure what short-dated puts are, give your broker a call. They can look it up. Give me a call. Send me an email. Do whatever. There are options that are less expensive than going the full term if you're getting a little bit nervous. So.
Perfect. So just to kind of summarize overall, Bob, this bump in demand that we started to see in the mid to late summer really drove the markets into a much more positive position overall. Now, a lot of the bushels were already owned by other people other than the farmers themselves, but there are still opportunities for farmers to either improve their positions overall. Not get too fancy about things, but looking at buying some calls outright to improve their position for their 2020 crop. But these farmers have a lot of opportunities, even when it comes to looking at improving their local basis. I mean, you said it yourself that a lot of elevators were calling around to find out how many bushels individual farmers were producing, and in that creates opportunity to actually negotiate what kind of price a grower can get for those bushels.
Yeah, that's exactly right.
Especially on corn, yeah. Looking forward to 2021, we'll likely see an increase in overall acres, but it's probably not going to be enough of an increase to really suppress prices more than they are today. We may actually see an improvement in prices. As you said, the world needs a good U.S. crop overall, and so there is a lot of optimism to be looking forward to in 2021, and getting in a good position now will absolutely help going forward. Anything you want to add to that summary?
Yeah, that's a great summary, Jim. The one thing to keep a real close eye on, and we've been talking about this in our daily writing that we send out, in our weekend reports that we send out, any conversations we have with customers, watch that July versus November soybean spread. That one is going to be something that will kind of dictate where this market can ultimately go. It's something that I've had it in the past where you can look at the years, the spread has moved quickly and moved aggressively, Jim. You don't want to get down on the markets when you see July. If July were to trade into that $15 range and the spread is $3 between it, just like it hit in 2012, 13. If July is at 15, that puts November at 12. You don't want to get down on the new crop market at $12 because July is at 15. Don't do that. That's the wrong mentality to take there. You still want to look at $12 new crop beans as a area to protect. So Don't get sidetracked between the different prices in the summer months here versus the new crop months, Jim. That's something that has happened in the past, and really trying to forewarn guys, don't get caught in that trap.
That's great advice. So, Bob, if anybody wants to get in touch with you or with anybody else at Kluis Commodity Advisors, where can they look?
Yeah, you can look on our website. We've got a website. Just Google us. That's pretty easy to find us there. We've all got our lovely pictures on the website there with phone numbers behind us. My number is 888-282-6141. That's my toll-free number. Rings right into me, and I'll visit with you about anything that you need to visit about. You can also send emails. Again, that's all on the website. So I don't want to get too fancy there, but just Kluis Commodities, and you'll find me that way. And one thing that we also take good pride in, Jim, is we actually have a grain trading academy that we hold in the wintertime. And that's something that we've had really good luck with, kind of going through the basic ideas of what to watch. And we didn't even get into talking charts today because it's a whole nother podcast. But we teach you how to look at the charts, what to look at for support and resistance, and the supply and demand reports, how to read the CFTC Commitment of Traders reports. And so that Grain Trading Academy starts in January. And again, you can find that information about that online at our website. But that is also a great tool that we offer during the wintertime here when farmers are looking for something to do. So
excellent. Well, thank you so much for joining us today, Bob.
Yeah, I appreciate that the opportunity, Jim, and again, have a great Thanksgiving.
Thank you. You too. So as always, be sure to tune in on the 1st and 15th of every month for new episodes. And until then, stay field ready.
Thanks for tuning in to this episode of the Rob Seco Field Ready Podcast. Join us next time to be field ready.